Hello and welcome to ActivTrades News. Is the US bull market era on borrowed time? With US equities stuck in global market turmoil, the doubters and those betting on lower share prices are everywhere. After the S&P 500 ended 2015 with a slight decline, share prices have fallen sharply. The index has so far slid 9% in 2016, putting it among the worst opens to a year on record. Fears about a hard landing in China, no sign of oil stabilizing, and a strengthening dollar have raised concerns about US economic growth and that company earnings at a critical juncture. Last month, the Federal Reserve started increasing borrowing costs for the first time in nearly a decade, closing the door on the easy money era that did much to push equity valuations sharply higher. Why is talk of a Fed policy blunder growing? As Federal Reserve policy officials gather for the first time after their decision to raise interest rates in December, the backdrop now couldn't be more different. The long-awaited rate increase went smoothly, but concerns over China, the global economy as a whole, deflating commodities and financial market valuations have since risen to the forefront. What are the underlying reasons for Russia's ruble roller coaster ride? Even by the standards of this year's market turbulence, the ruble roller coaster ride has been pretty dramatic, losing about 20% of its value in a month, at some points approaching the important psychological threshold of 100 rubles per US dollar. Whilst the currency has staged a recovery in recent days, it is still more than 2.5 times as weak against the dollar than it was 2 years ago, with the economy having been bruised by the global fall in oil prices and giving rise to expectations of a second straight year of recession. Time now for the weekly forecast. Traders can be very much forgiven for feeling somewhat weary after the week that has just gone by. But as we start a week anew, there is still much to look at, especially with the US earnings season. If some of the heavy hitters can beat expectations, then there is a possibility we will continue the general rally in risk assets that began in the wake of the European Central Bank meeting. On Thursday, the 4th of February, we have the Bank of England inflation report projection for inflation and economic growth, which covers the next 2 years and provides valuable insight into the bank's view of economic conditions and inflation, the key factors, of course, that will shape the future of monetary policy and influence the interest rate decisions there. The Bank of England Governor Mark Carney is also due to hold a press conference along with other MPC members about the inflation report. And then on Friday, the 5th of February, we see the US trade balance, which is export demand and currency demand, which are both currently linked because foreigners must buy the domestic currency to pay for the nation's exports. Export demand also impacts production and prices at domestic manufacturers. And that's it for this weekly news. See you again next time.